Is this Enron kind of creative accounting? Time will tell. This cartoon summarizes the trade on artificial intelligence. Right now, everyone is powering money and hoping that there will be some payout. Against the background of AI, US Fed is trying to maintain its credibility. For last 64 months, Fed's actual inflation has remained more than Fed's target of inflation. One of the reasons is expanded federal balance sheet after COVID crisis. They have now appointed a committee which includes Dr. Raghuram Rajan to look at how they can manage Federal Reserve balance sheet. Because of the credibility related doubts, US interest rates have started inching up. The US 30-year bond today is trading at a level which was last seen in 2007. The US 10-year yield has also spiked post last federal policy meeting. While interest rates in US is rising, it is failing to support currency. Dollar, which normally should strengthen when US interest rates are going higher, as more money flows into America, this time is showing different behavior. One of the reasons why dollar has weakened is American government balance sheet. They are earning roughly around $5.6 trillion and they are spending roughly about $7.5 trillion. Interest alone constitutes about $1 trillion. Net earning 5.6, giving away or spending roughly 7.4. The deficit keeps on increasing. That deficit needs to be funded. That's happening via the debt market. And US debt has now touched about $39 trillion. Correspondingly, dollar index has kept on falling vis-a-vis peer group. It's now trading below 100. Americans have become richer without saving as their equity market has done well. US now constitutes more than 70% of global market cap. This rally in stock market has created household net worth, which in turn is supporting consumption. As consumption remains strong and tariff kind of restricts some of the imports, local manufacturing in US is doing well and the PMI has risen to 4-year high in the month of July. This is also reflected into stock market where top 10 firms are now about 43% of S&P 500 market cap. This is highest in many decades. There is sharp polarization where big is becoming bigger and small is remaining small. Market cap to GDP ratio, US has exceeded 200%. This partly explains why Warren Buffett is sitting on so much of cash. Normally, he would have used this benchmark indicator, market cap to GDP ratio, for determining whether markets are in a bull phase or a bear phase, whether markets are expensive or markets are cheaper. German market cap to GDP ratio is 50, UK is around 100, Japan is about 175%, and US is right at the top at 200%. From a valuation point of view, today US stocks looks on the higher side of valuation, both on an inflation adjusted valuation as well as on a nominal valuation.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.